What are dividends? How to earn passive income from stocks? Hi guys. What do you know by dividends? And do you know how to earn a passive income from stocks? A dividend is like a bonus or a share of the profits. A company pays to its owners, means the shareholders, similar to getting rent from a property you own. The basic definition of dividend is it's a distribution of a portion of a company's earnings to its eligible shareholders. The key takeaway, not all companies pay them and they are not guaranteed. Now, let's discuss how the dividends work. First, the decision makers. The company's board of directors decides if and how much to pay out based on a profits and future growth needs. Source of funds. Dividends are typically paid out of the company's net profits or the surplus cash. Next, the payment frequency. Most companies pay dividends quarterly, but some pay monthly, semi annually, or annually. Pay share basis. Payments are made per share. That is, for example, if a company announces a $1 per share dividend and you earn 100 shares, then you will get $100. Now, the types of dividends. First one, cash dividends. The most common type. Cash is deposited directly into your brokerage account. Second one, stock dividends. Instead of cash, the company gives you additional shares. This preserves the company's cash reserves for reinvestment. Now, the important dates, that is the crucial dates for investors. First, the declaration date, the day the board of directors announces the dividend. 2. Ex dividend date, the most important date. You must own the stock before this date to receive the next dividend payment. If you buy and or after this date, you won't get the dividend. Third, record date. The date the company checks its records to identify eligible shareholders, that is usually one business day after the ex dividend date. Fourth one, payment date. The day the money is actually paid out to shareholders. Why companies pay dividends and investor benefits? Signals financial health. Regular stable dividends often indicate a healthy, stable company with consistent cash flow. Attracts investors. Dividend paying stocks are attractive to investors looking for a reliable source of income, that is, especially in retirement. Boost total return. Dividends plus any stock price appreciation contribute to the investor's total return. Dividend reinvestment plans, that is, DRIPs, explain that investors can automatically use their cash dividends to buy more shares, often commission free, which helps compound wealth over time. Now, the key metrics to understand for advanced viewers. First, the dividend yield. The annual dividend per share divided by the current stock price, expressed as percentage. It helps compare different dividend stocks. Payout ratio. The percentage of a company's earnings paid out as dividends. A high ratio, that is 75% plus, might be a warning sign that the dividend isn't sustainable, while a low one, that is 10 to 30%, suggests the company is reinvesting for growth. Now, what are the risks and considerations? 1. Not guaranteed. Companies can reduce or eliminate dividends at any time, which often causes the stock price to drop. Next, the impact of interest rates. When interest rates rise, dividend stocks may become less attractive compared to other interest paying securities. The last and the least, taxes. Explain that dividends are generally a taxable source of income, though rates can be lower for qualified dividends depending on jurisdiction. Now, the call to action. That is, the dividends offer a great way to generate income and build long term wealth. CTA. Encourage viewers to research dividend paying stocks and consider their own investment goals. So, link to relevant sources in the video description. Thank you.